Have you sort of written off Macri? Is he going to lose? And has Alberto Fernandez now got to prove that perhaps he's not the worst case scenario?
I think statistically it's very difficult for Macri to come ahead, and there's not much he can do. He's constrained by the austerity program, so there's no populist spending. There's only a gradual recovery. Inflation is only gradually improving. So there's not much momentum that can really gap that 15 to 16% differential to Fernandez.
The Argentine peso got slammed again today. So after getting clobbered yesterday, fell again more today. Fernandez came out, and he didn't say that much to reassure the markets. We're not going to default, but he didn't sort of go out of his way to make the markets feel good. Is there a danger between here and October
Absolutely.
where neither of Macri or Fernandez have any incentive to say or do anything that could provide some stability?
Well, I think Macri, as the head of state, as a responsible politician, and you have an independent central bank, they should manage this financial stress, or at least try to the best that they can. But the problem with Fernandez is we're not looking to the Macri administration. We're now looking at the Fernandez administration. And he and some of his advisors have ruled out the worst case scenarios like capital controls, default. But that's not enough. Right. We need to know that he understands that we need fiscal austerity, we need labor reform, we need pension reform, all the context to attract foreign direct investment for above trend growth. It's not sufficient to rule out these worst case alternatives, but yet not give a detailed plan on how to achieve debt sustainability.
But how do you get the market's confidence back? You have CDS swaps right now sort of, implying an 80% chance of a default over 5 years, 40% in the next 12 months alone. And you've got a country that doesn't really have the greatest track record with regards to stiffing creditors in the past.
And worse yet, you have not a lot of tools to contain the stress. Mm-hmm. Net FX reserves at the central bank are maybe around 18 billion, and we have about 10 billion equivalent in auctions coming due September, October that need to be rolled over, and we're waiting to see how the first auction will go this evening. So that's a clear liability in terms of either pushing the FX rate a lot weaker, which then hurts the debt sustainability, or it could compromise reserve position, which hurts liquidity indicators. So it's a very difficult moment. And what can we hope for? Well, if they're able to manage some of this liquidity risk over the next couple months, then we can wait to see what plan Fernandez has. But he's not focusing on meeting investors or reassuring investors, which I think is unusual because he has a 15 to 16% advantage. There's some room there to moderate the message. But if he's not moderating, if he's not appointing great technical advisors, it leaves us without an anchor.
But, Macri sort of addressed all these issues. I understand he wasn't popular politically for a lot of other reasons, but from a market perspective, you look at what he did with getting the economy, or I guess a certain respectability, back to this market, whether it was the credit market, whether it was equities, or whether it was currency.
Right, and I think everybody was long Argentina risk on the Macri reform narrative.
Right.
But now this is Fernandez, and the memory of default with Kirchner in the government, in Kicillof potentially at the province of Buenos Aires, the largest province in Argentina. I think that's the problem. This is a track record that you're not going to easily forget.
Sure.
And so everybody expects the worst.
Siobhan, I know that the polls got it very wrong, but should investors have built in some sort of risk factor to the fact that Macri was not going to be popular with his own base?
Shame on all of us, but we've had 20 polls, very high frequency polls, several maybe each day, pointing to a deficit for Macri of anywhere from 3 to 6%. So to have a gap of 15 to 16%, and also we had confidence indicators improving, the FX rate stable since May, everything pointed to a much tighter race. And so given that we were so caught off guard, the secondary markets do not accommodate such one-sided risk. It makes it very difficult. Prices just keep gapping lower, and now investors are paralyzed, waiting to see what's the clearing level. Is it 50? Is it 40? But we're pricing in a high probability of default as it stands right now.